Hello everyone, welcome to the Alpha Hustle. Here is a weekly analysis of Nifty and Bank Nifty on how market auctioned last week with important references and potential scenarios that may likely to play out in the indices next week. So let's quickly get started. All right, so let's start with the review of Nifty. So we had a change in the context in Nifty during this month. We had a 5 months of one-time framing to the upside starting from October, November, December, and January. However, the sellers started to come in at higher prices, especially within the zone of 15,000 to 15,500. So all the rallies within the zone of 15,000 to 15,500 have been sold into. So these selling tails that we had suggest that we have some higher time frame sellers coming into the market. One time framing to the upside has been stopped this month. We had an inside month during the month of March that has been broken down to the downside in April. One of the interesting nuances that we had on these monthly charts, the Jan high of 14,765. For the last 4 months, the buyers failed to get a closing above this level of 14,765. Stopping off one time framing to the upside and starting off one time framing to the downside, the context on a longer term time frame has changed, turned into bearish to sideways market. So unless we get a closing back above 14,765, either in April or May, the context is likely to remain the same. We have a nice 10-week balance, and within this balance, the one time framing to the upside has been stopped during the first week of April, and then the market started one time framing to the downside. Sellers tried to probe below the prior swing low of 14,261. However, they failed to get a closing below this level. This could be a potential failed auction if sellers fail to get a follow through next week below this week's low of 14,155. One of the important nuances is there hasn't been a great volume expansion when we started having the one-time framing and sellers coming in while pushing the market towards the low end of the balance. So if this turns out to be a failed auction, we could have a sharp upswing. Otherwise, the sellers will try to absorb the demand within this zone and get another leg down towards pre-budget swing low. Again, the context from the intermediate term time frame has changed from bearish to sideways. As long as the market rotates within this 10-week balance, we are likely to continue the sideways price action. On the shorter time frame too, the context has changed. So we started forming the lower highs and lower lows. So the context has changed from buying the breaks to selling the rallies. So we essentially had pretty much a balancing week, prices rotating between 14,200 and 14,500. So this sideways auction that we've been having for the last 3 or 4 months formed a big HVN. Buyers have to be very strong. If they were to kind of have a breakout to the upside, they need to take out this HVN. While the market staying below this HVN, it's highly likely that we may have a breakdown for the retest of the prior swing lows. So this HVN that we had at 14,500 and 14,600 that acted as a support in Feb as well as March, it's kind of acting as a resistance now. If the buyers are able to take out the zone of 14,500 and 14,700, we may have a change in the context in the very short term. Now let's look into the market profile charts to understand how the market auctioned for the last couple of weeks and what could be the potential scenarios that may likely to play out next week. So basically we are talking about two different balances. So we had a nice 4-day balance in the prior week and another balance this week, which is overlapping to the downside to the prior week's balance. So this suggests that the sellers are in control of the auction and the value is moving lower. So this week started off with a big gap towards the low end of the balance where the market tried to probe below the prior swing low of 14,261. However, sellers failed to get a follow through yet again below this important reference. The subsequent day opened with a nice gap. However, buyers are not so confident this time around to push the prices higher, fill the gap that was left on the 19th of April. The responsive sellers came in and marked the prices lower and pushed the prices back into the prior day's value area and closes back again towards the prior balance low. We had a follow through to this close on the 22nd of April. However, the sellers failed yet again to find acceptance below this important reference of 14,261, and the buyers eventually pushed the markets higher. An interesting price action in Friday's auction, where the market opened right within the prior day's value area and started one time framing to the upside, took out yesterday's high. The buyers failed to get a follow through and probe the highs for the week. So this HVN that we had on the 20th of April is an important reference to watch out for, which has got presence of responsive sellers. For the market to head higher, the buyers need to take out these responsive sellers and mark the prices higher and start an imbalance move above this 4-day balance, fill the gap that was left on the 19th, and then probe the prominent point of control on the 16th of April. So any acceptance back above this balance, the prior week's balance, is likely to change the context in the very short term. One of the important nuances for this week is this reference of 14 to 61. So this level has been tested on all the 4 trading sessions that we had this week. So this zone of 14,150 to 14,250 is likely to act as a strong demand zone. So the potential scenarios that may likely to play out next week, if the sellers get a follow through to Friday's low and start to find acceptance back within the 14,150 and 14,250, we may likely to have a spike down and start an imbalance move. If the sellers yet again fail to find some acceptance within this zone, we are likely to have an auction to the upside, especially towards the retest of the strength of the sellers between 14,450 and 14,550. All right, so let's now move on to Bank Nifty. 5 months of one-time framing has come to a halt during the month of April, when the March inside month has been broken down to the downside. So we started one-time framing to the downside during the month of April and clearly finding acceptance below the prior all-time highs of 33,000. So this makes this counter quite weak when compared to Nifty, unless the buyers claim the zone of 33,000 to 34,000, the context remains bearish. Stopping a one-time framing to the downside and starting one-time framing to the upside would change the context on a longer term time frame. So on the weekly charts, we had an inside week towards the end of March, which has been broken to the downside in the first week of April. That started the one-time framing to the downside for 3 continuous weeks. The swing lows of pre-budget rally has been retested. However, the buyers seem to be emerging within these demand zones of 29,500 and 3,500. One important aspect to note looking at these, particularly these 2 green candles, is that the volume is quite weak. So these rallies are at the back of some weak volumes. So this suggests that all these pullbacks are at the back of some low volumes. So this zone of 33,000 that acted as a support for a couple of weeks back in March is likely to act as a resistance now. So we have a 2-week balance here trading between 3,500 and 32,500, and the auction for the next week is likely to be between these 2 references. So clearly there has been a structural change for some time now, at least for the last couple of months, where the market started forming lower lows and lower highs, and we continue to do so heading towards an important reference of 29,661. So buyers seem to be emerging within this zone of 29,600 and 3,500. It's interesting to see whether these are strong hand buyers that could potentially start a pullback to form another lower high. Context in the short term is bearish to sideways unless the buyers are able to claim 34,000 and 34,500. So the 2 important references that we talked about, so this HVN that we had at 32,000 and 32,500 that acted as a support in the month of March is likely to act as a resistance now, while this HVN that we had at 30,500 is likely to act as a demand zone. So if the buyers were to able to find acceptance back above this zone, then we may likely to have a spike up, start auction towards the 33,000 and 33,500 zone. If the buyers are weak, and sellers probably use this reference zone that has been rejected twice already during the prior week as well as this week. And if there is a follow through to the downside to the Friday's low, we are likely to head for an auction towards the demand zone and retest the demand within this zone of 3,500. So any acceptance within this zone, we may likely to have a spike towards the prior swing of 29,600. Now let's look into the market profile charts. So essentially for the last couple of weeks, we have been trading in a 2000 point balance of 3,400 and 32,400. So during the prior week, we had 4 days of one-time framing to the upside where the sellers appeared towards the balance high, especially within this zone of 32,400 and 32,500. So this marks an important reference to watch out for on the upside. So this has got some strong presence of responsive sellers. This week started off with a gap similar to what we had in Nifty, where the sellers yet again failed to probe lower with some responsive buyers marking the prices higher. However, these buyers that appeared, especially within this zone of 3450 and 3500, are some weak hand buyers leaving some poor lows. Market had a nice open. However, there was no follow through yet again, leaving poor highs with responsive sellers stepping in within this gap zone to mark the prices lower. A lower open to the follow through from the prior day's close. However, the sellers failed yet again to push the markets below the 3,500 level that led the auction to the upside, clearing off these poor highs on the 20th of April. Market opened right within the prior day's value area where the buyers started one time framing to the upside with some nice auction, tagging the prominent point of control left on the 16th of April, where the responsive sellers that we had stepped in to mark the prices lower. So for the auction next week, this remains to be an important reference to watch out for on the upside, which is 32,200 to 32,500. So we have some presence of some responsive sellers. If buyers are able to find some acceptance within this zone, we are likely to get a spike towards 33,000, 33,500 zone. If sellers were to get a follow through to Friday's close, we are likely to head towards the demand zone of 3,400 and 3,800. Sellers trying to find acceptance within this zone and absorb all the demand that we have within this zone, we are likely to head lower with a spike clearing off the poor lows that were left on the 19th of April. So essentially for next week, the balance rules apply. The prices are likely to be choppy as long as the market stays within this balance. Any acceptance towards the low end or the high end of the balance, we could expect some spikes, probably a start of an imbalance move. Any rejections would mean a failed auction on the either of the range extremes, where the destination trade would be towards the other end of the balance. That's all for today. Thank you very much for joining and listening. If you find this content useful, please do like, share, and subscribe. Thank you.